Aarti, and I hope you all are doing good. So, as you know, this is our initial series, and today's class is 17th. And today we are going to complete your leverage and the sources of funds. Okay, so based on your unit 7, I'm going to cover one case study, and based on leverage unit 8, I'm going to complete the numerical part. Okay, so make sure this is very important session for you for revising your unit 7 and unit 8. Chaliye. So let's start this session. So today's first question is a company has the following data: sales 10 lakhs, variable cost 6 lakhs, fixed operating cost 2 lakhs, interest on debt 50,000. Firstly, we need to calculate the contribution. Next, EBIT and C, EBT. Now, what is the meaning of EBIT? This is your earning before interest and tax, correct? And EBT is your earning before tax. So here we need to calculate three things. So if you know this statement is your income statement. If I show you that statement, that is sales per unit minus variable cost per unit. Variable cost per unit means that direct amount, है ना, the direct cost which is actually directly linked with the volume of production. That is your variable cost per unit. And when you subtract it from the sales, you are going to receive contribution. है ना? Now this is your contribution. Correct. Next, from this you are going to subtract the fixed cost. As soon as you subtract the fixed cost from the contribution, you are going to receive profit. Or here you can say that is your EBIT. See, if you read the second option which we need to calculate, that is EBIT. And then if you read the third option, that is your EBT. Can you see this I is missing in this third option? Correct. So here this earning, the second earning is earning before interest and tax. But your third option says earning before tax, means now you have allowed the tax. Correct, you have allowed the tax part. So firstly you calculate the EBIT. From this you must have taken the interest deduction, and from this you get the EBT. Okay, so if we read the question again, as here not per unit data is given, so I'm removing the per unit option. Directly we can calculate. चलिए, so what is the sales amount? That is 10 lakhs. Sales amount is equal to 10 lakhs. From this you need to subtract the variable cost. That is your 6 lakh. Correct. So contribution is equal to 4 lakhs. From this you need to subtract the fixed cost. That is 2 lakhs. So what is the profit or EBIT? You can say that is 2 lakhs. 4 lakh minus 2 lakh is going to be 2 lakhs. Now what is the interest on debt? That is 50,000. So ultimately EBIT is what? 1,50,000. So contribution answer is equal to 4 lakhs. Then EBIT answer is equal to 2 lakhs. EBT, earning before tax, is equal to 1,50,000. So these are the answers, and this is how we need to calculate your contribution, EBIT and EBT. Chaliye, next question. If the sales of a firm increases by 10% and its DOL is equal to 3, what will be the percentage change in EBIT? So now this question is based on your DOL formula. Correct? where you say percentage change in EBIT divided by percentage change in sales. This is the formula. Okay, so here DOL is given as 3, percentage change in EBIT. See, DOL talks about the degree of operating leverage. Right? Your operating leverage. Now your operating leverage depends on contribution divided by EBIT. This is one of the next formula for DOL. Correct, but here the data is given for percentage change in your EBIT. So how much sales and how much your EBIT is going to be fluctuate. That is what we are going to calculate with the help of DOL. So directly they have given the DOL, and the percentage increase in your sales is given as 10%, and we need to calculate the change in EBIT. So what you can say, change in EBIT equal to 3 into 10%. This is equal to 30%. Okay, this is equal to 30%. चलिए, this is your answer. Now next, so we have seen 2 questions based on your leverages. Now let's read the next question. This is a theory question. If a company issues debentures to more than 500%, what is required as per regulatory norms? A. Appointment of statutory auditor. B. Appointment of independent directors. C. Appointment of debenture trustees. Or D. Approval from registrar of companies. So when we read in your sources of finance about debentures, so debentures is one of the source through which you get the funds, and debentures are what? These are the debt. Debt means you take the borrowing from public, है ना? So this is your debt part. Now if you hold more than 500 debenture holders, correct, so for them you need to appoint debenture trustee. Okay, and this is important point, very small point we have, and this is very important, so make sure you know the correct answer. Correct answer is your option C. Next, now this question is based on case study where Vignesh Limited, a public limited company, issued redeemable preference shares RPS worth 50 crore in the year 2010 with a redemption term of 20 years. Now the company has regulatory paid dividends until 2022. Due to financial challenges, it failed to pay dividends in 23 and 24. The management now plans to redeem the shares in 2030 by issuing fresh equity shares to meet the redemption amount. Additionally, Vignesh Limited is considering a new infrastructure project for which it plans to issue fresh batch of preference shares with a maturity of 25 years. Okay, so this is our case study. Now, based on this case study, we have few questions. Chaliye, so one by one, let's talk about it. The first question is, according to the Companies Act 2013, what is the maximum redemption period for standard redeemable preference shares? As you know, in India, we cannot issue irredeemable preference shares, है ना? Sorry. This is not allowed in India. So we need to issue with some life, with some maturity. So Generally, for companies, they can issue max 20 years this preference shares. But in case of project, which type of a project? Infrastructure project company. Hana, they can issue for more than 20 years. But remember, not exceeding 30 years. Correct? This is the life. Now, when infrastructure project companies are issuing for more than 20 years, from the 21st year, they need to redeem 10% of preference shares every year. Correct? This is the point you need to remember in case of an infrastructure project. But they are not asking here in this question about an infrastructure project. No. Standard redeemable preference shares. So that is 20 years. Correct answer is 20 years. Next, can Vignesh Limited, being an infrastructure company, issue preference shares with a redemption period of 25 years? Now, in this last line, if you read the case study again, additionally, see this line. Vignesh Limited is considering a new infrastructure project. Hana? Means now they are falling in this second criteria. In the second criteria. So, and they are issuing the preference shares for what time period? For 25 years. So the answer is going to be yes. Yes, it can issue this redeemable preference shares for up to 30 years. So this is allowed period. Hana? That maturity can be any period but cannot exceed 30 years. Okay, so the correct answer is answer A. Chaliye. Next, since Vignesh Limited did not pay dividends for 2 consecutive years, what additional right do preference shareholders get? A. Right to appoint directors. B. Right to vote on all company resolutions. C. Right to claim interest. Or D. Right to convert shares into equity. See, even if company didn't pay any dividends, they have the right, if company issued convertible preference shares, so they get the right to convert their preference shares into equity. So this is not the point we want in this. Right to appoint directors, somewhat you can say this is correct, but not exactly. To right to claim interest, they are claiming interest without any uh, any further hurdles. So this is also not the correct point. The correct point is right to vote on all company resolutions. See, if I talk about the preference shares features, what is the first feature they are going to receive? Fixed dividend. Hana, they get preference over equity shareholders at the time of liquidation of a company. Remember, this liquidation is important. Correct. But they don't get any voting right. No voting right. But there is one condition. That condition is what? That condition is given in this question. That if company did not pay dividends for 2 consecutive years, continuously we need to see. Hana, as you can see in the question here also, company failed to pay dividends in 23 and 24. You can read in fourth line. Everyone, make sure company failed to pay dividend in 23 and 24. 2 consecutive years. So here the preference shares gets the right to vote on all company resolutions. So the correct answer is answer B. Chaliye. Next, let's solve few more questions, especially numerical questions based on DOL. So a company has sales, variable cost and fixed cost. You need to calculate degree of operating leverage. Now, operating leverage means whatever your daily business is. On that, what is the maximum output that you can generate with the available resources? That is what your degree of operating leverage will tell you. Now, how to calculate this? Remember, in case of this leverage unit, you need to remember that income statement. Which income statement I'm talking about? This statement. This statement is very important. Correct. Chali. So here, firstly, we need to make that statement that sales minus variable cost. This will give you contribution minus fixed cost. This will give you EBIT. Okay. Now, degree of operating leverage. As here no percentage is given, so we are not going into that percentage. We have another formula where we use contribution divided by EBIT. Now, how you can remember? See, in this income statement, first thing is coming contribution. So you are going to write in your numerator contribution, and then EBIT is coming. Okay, so in denominator you are going to write EBIT. So sales is equal to 10 lakhs, variable cost is equal to 6 lakhs, contribution is equal to 4 lakhs, fixed cost is equal to 2 lakhs. So EBIT is 2 lakhs. So degree of operating leverage equal to contribution divided by EBIT. So 4 lakh divided by 2 lakh, that is 2. Correct? So correct answer is 2 times your degree of operating leverage. Now, next question. A company has EBIT 5 lakh, interest on debentures 1 lakh. Calculate the degree of financial leverage. Okay. So again, if I tell you about the income statement, we start with the sales minus variable cost contribution. See, again and again I'm repeating everyone, so make sure now you are getting what income statement looks like. Okay. From this you need to deduct the fixed cost. You receive EBIT. Now from this EBIT you subtract the I part, that is interest, and you get the EBT. So remember, from sales to EBIT, है we calculate your operating leverage, OL. From this EBIT to EBT, we calculate financial leverage. Now, financial leverage is what? Financial leverage talks about that without getting extra amount or extra funds from the shareholders. Okay, you're not getting the funds from the owners, you are borrowing. So what is the maximum amount you are borrowing and what is the maximum use you are doing from that borrowing? That is what your degree of financial leverage talks about. So DFL equal to, now what is the formula, how you can remember this? In the income statement, what is coming first? EBIT. So write EBIT directly, then divided by EBT. So here your EBIT is what? 5 lakhs. Interest is what? 1 lakh. With the uh, borrowers or with the debenture holders, that borrowers, so companies, from the banks, whatever the amount you have borrowed, what is the maximum uh, use we have done from that amount? That is what we are calculating here. So EBIT is equal to 5 lakhs divided by EBT, that is 1 lakh. What is DFL? That is 5 times, and this is your answer. Correct? Chali. So we have seen today in today's session about how to calculate degree of operating leverage, how to calculate DFL. Even in this DOL, we have seen in case of percentage how to calculate. Then we have seen one case study that is very important from exam point of view. And apart from this, we have seen one important part, that is if more than 500 debentures holders in your company you have made, then you to appoint trustee. Okay, so with this we complete today's session. But before I wind up this session, one important announcement is to make that from 17th May we are starting case studies and PYQ and MCQ batch. Now this batch is very important. In this batch we are going to cover your all the exam pattern, like case studies, PYQ, MCQs, means we are going to do n number of practices. Along with this, we are launching revision batch. Now in this revision batch, one last time we are going to complete your concepts. है ना? Now this is exam oriented. This is concepts, exam oriented, and here we are going to deal with the concepts. Correct? And in this batch, we are going to do the practice. So if you want to clear now in this June 25, so this is your final batch where we are going to complete the concepts. Both the batches are different. Okay, concepts we have the revision batch. For the practice we have the case studies plus PYQ plus MCQ batch. And if you want to purchase it, use the code, that is Y895, so that you can increase this discount amount up to 77 to 78%. Okay, this is the benefit for both the batches if you use the coupon code. Chaliye, so now with this, now I am winding up